What's up, retail investors? Welcome back, y'all. You know we back at it. I'm back at you with another video again. It's your boy D, right? On D's Daily DD. All right. So shout out to y'all. For hanging in there, diamond handing these things. Today we definitely have to talk about some news that came out. Right. This is what I consider to be bullish for AMC and GameStop and all the highly shorted stocks. Right. It's a very important. Kind of made my day. I'm not gonna lie. Okay, because there was fraud that was committed, and now there's finally, consequences for that fraud. And remember, I'm not a financial advisor. It's not financial advice, right? Don't take it as that. Take it for educational and entertainment purposes only. That's what I'm here for, right? Just to bring you the information that's out there, the most up to date, so we can talk about it and discuss it and break it down, all right? And I know a lot of you AMC investors, you apes, right? You don't like reading, right? So I'm gonna read it for you. We're gonna break this down. What I do like about this article has to do with a hedge fund that collapsed, right? And it had to do with them cheating and them lying about a lot of things. And it's going to talk about, right, this article is going to break it down on how they did it. And that's what I really like, because that just puts more conviction and makes me want to buy more, right? Which I bought, a few more shares today. It's all right. So whatever, I got happy, and I was like, okay, this is confirmation of a lot of things. Okay, so you do what you want with your money, but honestly, it just makes me want to buy more. All right, because I think we're like getting this close to a lot of things. So today we're not going to spend too much time on the chart. We're going to spend more time on this article because it is a couple paragraphs. All right, so we have to talk about it. All right, in my opinion. So yeah, shout out to the subscribers. Thank y'all. Here's another video for y'all. Right, so thanks for coming back and watching. All right, so let's do this. Let's jump into it. I got it already. So before we get into the article, I'm actually going to start with the chart just so you can kind of see where I'm at. And I know this is a very, very bullish prediction, but I think time's running out for the hedge funds, all right? So let's just look at the chart. This is where I'm at. It's just a small prediction to see what could possibly happen just because of where we're at on the chart, all right? And I'm taking this information from back here. I'm just basically mimicking this move right here at a bigger scale, right? So if it is a cycle, if it is a pattern, right, because obviously there's these two big wedges here, that means that, if it's following the same pattern, it's going to form another big wedge, right? Even bigger than this, unless it's the true MOAS and we just freaking take off, right? And if they all cover, and I'm going to explain to you why, again, that's possible. But to me, in my opinion, guys, this chart, right, it's highly manipulated. Can't really use too much technical analysis on it, but there is something going on, I think, right here where we can see a big explosion. All right. So that's just my prediction. You could be bearish on AMC, whatever, right? You might want it to go down. Hey, it's your opinion. If we don't hold this support line, it could. But again, I think we're in this little pattern that was formed here too, where you have a drop and then you take off and then you see a rip, right? And so let's move on. That's just what I wanted to point out. This on the chart, right? So the SPY, looking kind of weak still, right? This is the daily chart. It's been pretty choppy. I don't see, too much good news right now for the SPY, right? I can't see it pushing up. We'll see. There's some heavy earnings coming out, so that's what's going to move this, in my opinion. But it hasn't. It's kind of testing this level, right? This like 413, but it already broke a couple levels of support, right? So I just want to point that out. It's looking pretty weak. And then let's look over this. So this is Stonks Batman on Twitter, and he just points some things out, right? And even though I think this is, manipulated data, it's not really true. It's the best, that we have, right? That we can see as like retail investors, as apes. That's all we got, man. So days to cover rip, then dipped prior to the run up in June. Okay, so this is the days to cover right here, right? It's just different time frames, but this one, it dipped, and guess what happened here? It dipped, right? So that's what he's pointing out. Much less shares on loan, while more shares are on loan shorted currently. All right. Next, shares on loan are rising. Average day a shorted share is borrowed is higher. I think the average share right now on loan is like 101 days, right? It's a long time. And then you have here, this is rising. You see, this is at its peak right now, even higher than it was before this run up. Okay. And this is important because this is what causes the run-ups, guys, like the shares on loan, right? When they're being bought up, when they're being bought back, it brings in the buying pressure. Okay. And then utilization, right? So we've been at utilization for like over 2 months. It has never done that, not for that long. And then it was very volatile here, right? You see when it drops, that's when the price goes up. Again, here you have a dip and then this drops and the price goes up. So when we see this drop, right, the utilization, because they're covering, we're going to see the price go up. I don't know the time, I don't know when, but most importantly, what we need to get into is going to be this, all right? So this proves a lot, in my opinion, like about the DD, about the manipulation, guys, about everything that the apes have talked about, the corruption, right? What the movement is about, not just the AMC and GameStop prices or the manipulation there, but market wide. All right, so check this out. Archegos stock manipulation scheme was historic, U.S. attorney says. Manhattan federal prosecutors arrested and criminally charged the owner, Bill I don't know how you say his name, and his former top lieutenant is one of the highest profile Wall Street prosecutions in years. All right, so they actually got arrested, guys, right? And I'll show you the charges right now. But until a few days ago, Bill Hang and his lawyers had thought they would be able to persuade federal authorities not to file criminal charges over last year's implosion of his $10 billion private investment firm, a trading debacle, and caused billions of dollars in losses for Wall Street banks, right? So the banks were involved in this. Not all of them, but some of them. But those efforts failed as federal agents arrested Mr. Huang, the owner of Archegos Capital Management, and his former chief financial officer on Wednesday morning and charged them with orchestrating a stock manipulation scheme that relied on their concealing the enormous risk the firm had taken on, obstruction or I don't know how to say, obfuscation made easier by the loose regulations it operated under, right? So he had it set up to where he was flying under the radar, right? Because of the way he set up the firm. There wasn't too many people watching it, right? So Mr. Huang and his former top lieutenant, Patrick Halligan, were arrested at their homes and were expected to appear in Manhattan federal court on Wednesday. The arrests were announced by federal prosecutors who released a 59-page indictment detailing a scheme that rippled through the stock market when it rapidly unraveled a year ago. The scheme was historic in scope, right? This is what the attorney said. And he said he described an arrangement to obtain billions of dollars, right, from banks and pump up the prices of Mr. Huang's favored stocks. Sheesh. The lies fed the inflation, and the inflation fed more lies, he said. Round and round it went, but last year the music stopped. Prosecutors said the men were charged with racketeering, conspiracy, securities fraud, and wire fraud in connection with the scheme to manipulate the prices of stocks in order to boost returns and in the process hurt other investors. They said the plan, which relied heavily on borrowed money, helped pump up the firm's portfolio to $35 billion from $1.5 billion in a single year, guys. Billions of dollars. Damn. At one point, Archegos effectively controlled $160 billion in a small basket of stocks that included Viacom and Discovery, prosecutors said. So see, the investigation is ongoing, guys, right? Like AMC is not done, it's not over, right? They just keep manipulating the price, but the things they're doing in the background that we can't see, they're probably gonna get caught. A lot of them are gonna get caught here in the next, right? Because the investigation, this is what they found, and they went after them, right? So, but Archegos' footprint in the market was small but invisible to regulators, investors, and even the big Wall Street banks that had financed its enormous trades. Archegos was a lightly regulated firm known as a family office that invested Mr. Huang's fortune and the money of a small circle of insiders, and it spread its bets across several banks using sophisticated financial instruments called swaps, right? So they did it through the swaps, which allowed Mr. Huang to bet on the direction of the stock prices without actually owning the shares, right? The collapse of Archegos shocked Wall Street and led to investigations by federal prosecutors. The Securities and Exchange Commission, with other regulators, the SEC filed its own civil complaint on Wednesday against Mr. Huang. Just now, right? The SEC. But Mr. Mulligan and two former traders at Archegos, the Commodity Futures Trading Commission, also filed its own civil complaint over the matter. Of course, his lawyer was trying to protect them and make it sound as best as he could, but you're talking about billions of dollars. Yeah. Mary Mulligan, a lawyer for Mr. said her client is innocent and will be exonerated. Yeah, I don't know about that. The Archegos collapse has put a spotlight on large family offices now, right? Which can engage. This is the small D's, guys, that everybody talks about, right? When those go down, then the big ones will go down with it, right? which can engage in just as much trading as hedge funds, but operate with less regulatory oversight because they do not use the money of outside investors like pension funds, foundations, and other wealthy individuals. So because they were using money from the banks, right? That's how they were getting away with it. But Mr. Huang, who cut his teeth at the pioneering hedge fund Tiger Management, also borrowed heavily to make his bets, compounding the risk of his trades. Archegos used a complex security sold by banks called a total return swap. I believe, I don't know too much about swaps, but I think it has to do it's kind of like options, right? Like with the options, you don't have to own the stock, you can just buy the contracts. So the swap is what allowed Archegos to quickly take on much larger positions in companies that normally would be able to do if it were buying shares outright, right? Because when you buy shares, that's what makes the price go up, right? And because the banks held the big blocks of stocks, Archegos and Mr. Huang avoided having to disclose its large positions to regulators and other investors, right? So, guys, I know it's a lot of information, but we're almost done with it. But it's good information, right? And it's civil complaint that his firm, Mr. Huang and his firm, to mask their buying power, pose a risk not only to the banks that extended that credit, but also to other investors who may have bought stocks like Viacom, Discovery, and Chinese education company GSX, right? Inflated the prices. So Mr. Huang knew that Archegos could affect markets simply through the exercise of its buying power, the complaint said. In June 2020, an Archegos employee was asked if the rising prices of Viacom shares were a sign of strength. And this part, oh man, he responded, "No, it's a sign of me buying," followed by a laughing emoji. Yeah, see, so these guys, they laugh in the retail, face. Like they don't respect those guys, right? So that's why we have to keep doing this, keep strong, right? Like keep holding till we get our squeeze, right? Archegos made, in my opinion, that's what I'm doing. Archegos made swaps deals with a number of banks, including Credit Suisse, Nomura, Morgan Stanley, and UBS. And prosecutors said Mr. Huang, Mr. Mulligan, and others at the firm made materially false and misleading statements to conceal the extent of its bets. Right. The risky result. Archegos held enormous positions in a small number of stocks using billions of borrowed money, right? So they over leveraged themselves. The effective size of the firm's stocks position swelled to 160 billion from 10 billion, revealing some of its biggest hedge funds in the world. Rivaling, sorry. The wages quickly fell apart in March 2021 when sharp declines in a few stocks in Archegos' portfolio led the banks to issue margin calls, right? Again, the word margin calls keeps popping up, guys. It's another way a short squeeze can happen, right? Demanding more money from Archegos to fund its bets. When Mr. Huang could not pay, the bank sold off millions of shares that were backing the swaps and took control of collateral that Archegos had posted in exchange for its big borrowings. Then the investigations into the collapse of Archegos began soon after the firm imploded, right? So the collapse led to billions in losses for a number of banks, but Credit Suisse incurred the most pain. It lost more than 5 billion, and the trading debacle led to a number of top-level management changes at the bank. Over the past few months, federal authorities have demanded documents from the firm, and the banks had meetings and interviews with a number of former employees at the Archegos, including Mr. Huang. The incident names 2 former employees as part of the scheme, Scott Becker and William Tanita. Both men have pleaded guilty and are cooperating with the federal prosecution. Whew. All right, guys. So it's a cycle of lies and market manipulation, right? Ooh. They lied about how big Archegos' investment had become. They lied about how much cash Archegos had in hand. They lied about the nature of the swaps and Archegos held, Mr. Williams said. And we allege that they told those lies for a reason, so that the banks would have no idea that Archegos was really up to a big market manipulation scheme. There it is, guys. Right, in black and white. The former top trader typically led discussions with the banks about the firm's trading positions, but that Mr. Huang and Mr. Mulligan directed and set the tone for those discussions. All right. So if they were truthful with the banks about the amount of risk Archegos was taking on, the financial institutions would not keep arranging new derivatives trades for it, right? The lawyers of Mr. Becker and Mr. Tamita did not respond to requests for the comments. All right, guys. So the next, it's just kind of breaking down a little more, but if you want to read this on your own, I'll set the link down below. And here, the second time Mr. Huang ran into trouble. Okay, because he had trouble back in 2012, but he was only fined $44 million, right? So when they're making billions, you think they really care about paying $44 million? Probably not, right? And here's the end of it. So, a law and a business professor at the University of Michigan said it was time that the large family offices be treated like all other investment advisors, subject to the SEC oversight and audits and inspections. If Archegos doesn't lead to bringing large family offices into Investment Advisor Act regulation, nothing will, short of a Martian invasion, Mr. Gordon said, right? So there you have it, guys. I thought this was very important and crucial to show that there is things going on in the market that shouldn't be going on, right? So when you over leverage yourself like that, right, there's going to be consequences. I'm glad that at least one firm got caught. You know what? And I did forget something, so let's go back. I forgot to show you that these other hedge funds right here. These are the people that are still shorting AMC, guys. These are big banks, right? Melvin Capital is going to close already, so that one's out. But you still have Bank of America, and they haven't even covered. We don't even know what they're going to do with their shorts, right? So Citadel, Simplex, Susquehanna, 683, Group 1, Millennium, Piction, Mahoney, Anchorage, right? I think Anchorage collapsed as well, though. So let me show you, that's what I wanted to show you. That's all I got for you guys today. All right. Thanks for coming by. Give the video a like if you, found this useful. If you found it good information, share it with your friends or whatever, pass on the word to get it to more apes. All right, guys. So have a good rest of your day. See you in the next video.